Welcome to Insights. I'm Eric. Thanks for joining us today. We're going to talk about the grain market. Corn and soybeans and wheat have all been doing quite well over the last, month for sure, and even longer than that. As we take a look, the primary trends for corn have been up for 7 months and 9 months and 9 months, and we've produced quite substantial returns since those flips. There's been a few resets. We've been talking about the energy builds that were surprising last week, and I don't think that conversation's over. The drop from yesterday's high has everyone concerned. Is this it? We've seen this before. The question is this actual information, or is this a signal, or are we still within the noise function of a trend? And again, we'll see from the daily part, nothing's flipped down, so it's still considered noise. I know people are like, well, okay, perhaps I came in late. I didn't buy 7 months ago, or I didn't buy the reset at a much lower price. We're going to take a look at how much the price of corn has gone up since this is even reset. These returns were pretty small. They were up almost 20-30% within this daily impulse right now. But we can see that the daily time trend, here's the price cycle and here's the time cycles. They're still up there. These were even higher, but these are moving higher. They're no longer all blue. One of them's red, and they're pushing up. The weekly time frames are all red. Some of them are bolded as a warning that they're statistically significant. These are all precursors of warnings. The primary trend is what we tend to follow, and these are blue, so they're above their norm, although the time cycle is pretty young. This is a market that could correct. We could lose the up status. We could go down. And since the weekly is extended, we could lose the daily too. And then it could all reset again. I mean, we'll have to watch energy during the declines to find out if the market is vulnerable or if the market is actually being accumulated. But if we want to take a quick look here and say, well, I should have taken profits, or this is it, yeah, you could have. These were numbers. We're going to have to look into the daily trend specifically for more information. And so let's open that up. Let's take a look. I don't think the file's been lost. Let's take a look at it here. We're going to see this impulse, the one that we're currently on, started on 4-1. It started off slow and then it picked up steam towards the end. And we can see that the price cycles and the time cycles, here's the time and here's price, they're moving along. They crossed above zero right about the middle of April. And then they really took off. Now at this point in time, I mean, whether you're here, looking here, or even here, these are 4 standard deviation cycles. And we almost have a time cycle that's approaching 1. And at this point, we got above 1. So if you have a lot of leverage and you can't stomach the reaction that takes place, and we're going to talk about that in a second, these are profit points. They have to be. I mean, if you're leveraged up to the eyeballs and you can't stomach any type of drawdown because this still could be noise, you take some profits off the table. If you bought this reset right here, this is a profit point at a 32% gain. I mean, it's as simple as that. I mean, will I do that? And I don't have that much leverage associated with this position, and I have 32% profits to speak of, or now it's less, but even 20%, even if it's 17, there's a cushion here, and I will continue to go and roll it until, number one, the primary trend flips down, or the primary trend gets old, or this, in the worst case scenario, maybe the primary trend, the daily trend is what we're talking about here, that has to flip down. Now, is this daily trend super old and it's over and it's going to flip? Yeah, it could. But let's just draw up another example here. Here's one that we saw in December of 2020. People were probably thinking, oh, this is it right here. We're 21 days into an impulse, not much different than here, 29 days into the impulse. We've seen a 19% return, which at the time is a near 6 standard deviation. And if you look in terms of z-scores, even these 4, 6, this is the normal probability distribution under a curve. It's statistically significant when we get above 1.95, which is right here. It's essentially, it's more than 95%. It's right. 97% of the curve at 1.96 is an observation that's under when you have it. That's what the observations of previous impulses would be. The current reading that you're seeing at 1.96 right there is outside of that curve. It's outside of the shading. That's statistically significant. When you get 5 standard deviations, readings like that, you're pushing. Let's take the 4. I mean, it doesn't even go past 4 on this graphic. You're 0.99997 of the observations are underneath the curve. So when you're out here, here's the observation. Everything is basically shaded. So, it's a very low probability event, a cycle. When you see a cycle reading like this, you're basically an outlier. You're standing all by yourself. Now, you can take profits on these, and here's one at 6. I mean, it's essentially 100%. Everything that came before this, every impulse at 20% that the computer recorded is below this. Now you can take your money off the table. Well, I'm going to run with my 20%, and the cycle time score is nearly 1. It's very similar today, very similar. And the market went from 20% and fell all the way down to 17%. And then it came back again. And again, this whole time the daily impulse didn't roll over. It didn't die. And the fact is it continued up until you reached about 24, 25%. But the limiting factor here was time. As soon as the time cycle got above 2 and 3, it starts to get so old that you're not going to continue on. So you pull the money off the table. Is this at 1.2 so old that you can't make any more money? Well, here it is again at 1.2. Current return, you made about 20% right up here. So did we do any better than that? Yeah, you squeezed a little bit more, got up to 24%. Is it worth the extra 4%? Well, I mean, some will say no. I mean, because the time value of money, you had to wait. Well, this was 23 days, and to get 24%, which was right about here, that's 50 days. We had to wait almost a month to get an extra 4%. You're probably best to go somewhere else and sit on the sidelines. Now, sidelines doesn't make you much. You don't make much sitting in short-term cash, so it's not as much of a trade-off. But it's possible that even at 1.2% or even at these readings here, which is very similar today, that the impulse is not dead. I mean, it went on until we reached 65 days, 4 standard deviations. It finally flipped down, and then we generated a reset here today. Are we going to do something like that? I don't know. I mean, but the point is if you are struggling at 4.9%, which again, that's essentially all 100% of the computer's past observations in terms of price cycle, 32% are below this, and you don't take profits based on your leverage, which is causing you to sweat and worry at night. This is a no-brainer. I mean, how much more are you going to make than this? I mean, these are all choices that you have to make. I mean, these fall within the categories of how you trade. Essentially, how do I play the corn market? Well, head back to the matrix. Yeah, I'm following the primary trend. I mean, the primary trend is up for 7 months. It's not even reached its cycle score. This can go up to 2 standard deviations. Yeah, it's going to breathe within that, but I don't use that much leverage to the point where I can't handle it. So the daily impulse might not be done. I mean, it could continue higher, but it only might give us another 2 to 3% on the upside. But then again, I'm not too worried about that because we're holding the core position here and we're going for more. I mean, how much more? You can go look at the lead M tab for corn, which looks at the continuous contract since 1959. The average bullish impulse produces 23%. That's why the weekly cycle score here is bolded blue. We're above that. We're at 53%. The average is 23%. Okay, so we're above that. But the maximum average is 30. Well, we're probably above that even as well. But one of the highest returns is 204%. And there's other ones that are lower than that are, the bottom line is that they're at 53%. There's maximum returns that are 200, which is 4 times that. And there's others that are below 200, but still above 53%. Now, if you want to try and time that based on your gut feel, well, go ahead and give it a shot. Now, what we're going to do is we're going to ride this until the primary trend gets old right here, or this flips down, or this goes above probably two standard deviations. At that point, you're going to be above 200% return. This rarely gets above two and a half, and yeah, it would be time to take profits. What are the risks of the current corn rally? It's extended on the daily, it's extended on the weekly. If this turns down, it could infect the weekly. You can say that for all the markets in the grain market. Is Does that mean that this can't go higher? Well, clearly not. I mean, it can go higher. We've seen it already. With 65 days, it's 29. We're at roughly 30 days. Yeah, there were some drawdowns. I mean, we got up as high as 20, then we fell all the way down to 12. Everyone probably cursed the day for corn for, well, you can count it, about a week's time, and then everyone freaked out, and then it completely recovered back and made a higher high by, this was in late January, and by early February we've made even a higher high. And then what do you do with this? You've got a pretty high reading and even more extended time. I mean, this is a logical profit point too, because you only got 1 percentage point higher here for waiting. I mean, you're trying to squeeze too much blood out of out of a turnip or juices, whatever. I mean, there's nothing there to justify continuation of that, if unless you're going for something more, and that something more has to do with the other time frames, and that has to do with the weekly as well as the primary. The evolution of the trade follows the primary trend. Now, the primary trend has plenty of time left in it, and it has a lot of price left in it. It's just these time frames. It's the what we call the daily, weekly, or the tertiary and secondary trends. There's the problem. Now, trying to time it specifically and say, well, that's it. We can't go any higher. Well, that some of that has to do with seasonality too. Where's the seasonal high in corn? I mean, we could get even further, or this could get stretched even longer. But how much are you going to try and go for? I mean, another 2 percentage point, 5 percentage point. The risk management is already paring back your system. But remember, you pare back their system, the evolution of the trade doesn't allow you back in until you get another reset. You may not get another reset. If the ultimate high comes in June or July, if you follow some of the seasonality, uh, then you're not probably going to get back in. But that's okay, because you're sitting in your core position and you're going to wait for a reset after the seasonally weak period, and then you'll re-escalate the trade again. In terms of some of the strength, and we're going to go back because I didn't make these charts, if you look at the Pro Index bottomed here within corn ahead of price, and it's skyrocketing higher. Corn is still much stronger than people are realizing. This is the Pro Index. This is the public index. This is inside the matrix. I can show you where the link is, and this is corn. This is corn's ETN. The pros, the professional participation, is leading price. Usually it's just a bunch of public chasing the higher, but the pros are knee deep in it. You have to be cautious that this one's going to fall off of, down the elevator shaft. If the Pro Index was making new lows, yeah, you'd be worried, but there's a heck of a lot of participation. So we have to frame this stuff within an understanding of where the Pro Index is, which is here. You can get these charts and follow those things, where seasonality lies. And again, the most important is what energy is doing. Again, the past reviews discussed this, and I don't want this to go on forever. Uh, we've seen energy builds for corn and soybeans into the decline, which is unusual. Again, that doesn't mean it's going to reverse it. The only one that actually showed distribution was wheat, and wheat has lagged the most recently and taken the biggest hit. But these energy builds, if this continues, is going to be supportive. Maybe it's not supportive right here in the moment, but it's going to be supportive at some point in time. A week from now, 2 weeks from now, at somewhere. We can't even be sure that this downturn that we saw from here is nothing but trading noise, because it's not deep enough yet. And if you're worried because I haven't taken profits, then what are you doing with the daily cycles? I mean, the daily cycles here almost reach 5 standard deviations. So these have to do with the individual and what type of vehicles you trade, whether you're using options, futures, excessive leverage, whether or not you can stomach a 5% pullback, a 5% withdrawal. These are choices that you know, but ultimately, if you can't stomach any of that stuff, you need to pull your money off the table when these things get bolded red. And then you have to be okay with missing more continuation, because a lot of this is just noise. But if you miss another 5% to the upside, hey, that's fine because you already booked your 20 or 25%. Well, that's basically where the grain market stands. I mean, I hope everyone still understands that the evolution of this trade, not much has changed. We're still following the primary trends. We're interested in the pro index and the public index and where the participation lies, and we're going to be following energy. We'll talk about this more. So if you have any questions, let me know. Contact me through the blog. We're going to keep this one open. There's nothing too valuable yet being disclosed because this could get really strange. Energy will be updated tomorrow, and I won't make that available for everyone. So you'll subscribers can take a look at it, be right here, and I will probably make some sort of comments about it if it's blatant, if it's real obvious. So if you have any questions, follow the links below, come back to the blog, make some comments below the video, subscribe to the channel, do whatever you need to do. We'll keep our focus here because this is a really hot market, and it's probably not over, and it's probably going to get really wild. So thanks for watching, and enjoy watching or following the grains today.